Relative Strength Index, aka the RSI. As it already indicates within its name, this indicator is used to measure the strength in the market at any given time. Okay, so it has two sections within it. The section on the top in red between the 70 and the 100 is known as your overbought zone. The section at the bottom in green between your 30 and 0 is known as your oversold zone. And what it simply means, overbuying means that there's too many buyers. So that should indicate what type of strength. It should indicate that you've got extremely strong bulls or buyers in this market. Okay, if the market is going around this green area here in the oversold, which means there's too much selling, this will then indicate that we have extremely strong sellers or bears in this market. Okay, how would it look in the actual chart? So basically the RSI would move along the average pricing. So everything in here is just average. Alright, so this is average price. So we don't trade in this zone here. So as soon as the RSI then pops into the 70 area, so it's above the 70, and we can kind of see the space in between here. Okay, so here for the first time we can then declare that we have strong bulls, right? So now the bulls are strong at this point, and for as long as this RSI stays above 70, it will forever indicate extremely strong bulls. Okay, you never take that away from them. So for as long as RSI is above 70, assume that the bulls will keep the markets going up. So what we expect there is that the chart will keep going higher and higher and higher because we have extremely strong bulls. So what usually happens is when you have a very strong bull, they're about to lose power. Okay, imagine someone at gym lifting 100 kilograms. Probably on their first try they'll probably do it and hold it for about 2 minutes. Okay, and if they try the second time, they might only go half the time and go only for a minute because they're running out of strength, they're running out of energy. Right, so in essence, when the bulls first got above the 70, so they passed the 70 mark, so it just went up. At this point, we are saying that these guys were at full tank. So this is when we had extremely strong bulls. Alright, and as time went, they started losing energy, and they're fighting and they're trying their best not to get to empty, but they can't help it. Alright, they are gonna lose their energy. So how do they lose their energy on the RSI? So basically what we're waiting for is for the market to then, the RSI to then move below the 70 area. Okay, at this point here, we are then faced with our first strong seller, because if you have a strong bull, it's only going to take a strong seller or a strong bear to move that RSI out of its strength zone. Okay, so a pretty strong seller came in and the market then started moving to the bottom side of it, which is this area down here. So this indicated a very strong bear or seller. So at this point we have started selling, and obviously whatever candlestick helped us create this or find this information out is the candle that we'll start selling from. Okay, the same happens though in the opposite direction at the bottom, at the oversold area. So as the RSI moves along the average area, and pops below the 30. So at this point here, we have just experienced our first strong seller or strong bid. Okay, and for as long as the RSI stays below the 30, we'll know that the sellers are extremely strong till they get to a point where they break out and now they're above the 30. At this point, all the strength that the sellers had has been challenged by this buyer that just came into the market here. So at this point, our first buyer, strong buyer in this case, came in. So at this point, we've got a strong buyer or strong bull. So at this point, if that candle looks like this, or however it looks, we'll then start placing buy orders from there on, from this point. Okay, so you don't buy while they're strong. Don't go into a bull territory and start playing bearish games. Okay, wait for them to run out of energy. Same with this buyers over here. If you're gonna buy, wait for the sellers to leave their territory. Wait for that very strong bull to come in. So basically, when we went down there, we had extremely strong bears, so strong sellers, and we waited for them to also run out of energy and go to empty before we started buying. Okay, it works like that, simple as that. Under strong bulls, wait for a strong seller to come in and then also start selling. So that's generally how the relative strength index is used. So let's go look at an actual chart and how this would look. Okay, so let's scroll down here. So down here you can already see buy and sell. So you can already assume that where it states, where it says sell here, this is basically the 70. Where it says buy is the 30 area. So we know here we have strong sellers, and we want to buy them as soon as they lose strength. Okay, here we've got strong buyers, and as soon as they lose their strength, we also own them. Alright, now starting off with the sellers, the RSI closed here for the first time in 2019 on the 4th of December at 5 p.m. Okay, so if we scroll up, we can then state that when this candle here closed at 5, it actually also closed the RSI below the 30 area, indicating that in this area we officially have extremely strong sellers, and we kept a watch on them. So at this point you start stocking that currency, whatever currency is over sold at this point. Alright, so still strong, still strong, still strong. And then for the first time the RSI closed above the 30 area, indicating that now we have a strong buyer, a strong challenger. So at this point here, so this candle here, when it closed, it gave us our first strong bull. Okay, just like when they entered below or went below the 30, it indicated a strong bear or seller. Okay, so we started buying from this area here, and as you see, the market kept going upwards from there, shot right up from there. Alright, and the RSI kept above the 30, indicating that the strong buyer was holding its strength. It held it so much that we went straight into the overbought area, okay, which then indicated that we now have strong buyers in the market. So when this candle here, when this one closed, right, we then found our first strong bull. Okay, so this whole area here this is when you didn't want to mess with those bulls. They were still at 100% energy, and you can see their energy depleting and depleting, and finally they closed below. So the candle that did that is this guy here. It was the first candle to indicate that we are now below the strength of the buyers. So this indicated that now we have a strong seller in the market. So from here we would have started selling. So if we do this, you will notice that on average the price started moving down from there. Okay, so strong seller in a strong market, strong buying market introduced themselves over there. Okay, so let's zoom out so you can see the full picture here. Okay, so there the market kept going down, falling, and then finally at this point they went below the 70. So let's take that example. So which candle? I think this one did it. So if we draw dotted lines, keep it straight, Alright, so at this point here the RSI closed below the 30, meaning that here we identified a very strong bear or seller, because now we're in the oversold area. Okay, and then as time went, they kept in there, they kept showing us that they're strong and they don't want to come above the 30, but they can't stay there forever. They ran out of fuel somewhere after that. So from here we can see that the market kept moving downwards because the sellers are showing you their strength. Okay, and then from this point we broke out. So probably it's this candle here is officially above the 30, showing us that here we potentially have a strong bull, and then the market might continue going upwards until we meet our next seller. That's literally how the RSI works. It's not complicated at all. The rule is simple. Let them gain full strength so that you can see that here is an area of strong support or strong resistance, and then wait for that resistance or support to fail. Right? Wait for the bull to lose energy, wait for the bear to lose energy before you actually try and execute a trade. Right? So let me know if this topic was sauced up to how I think it should be. Alright, and if you have any suggestions, drop them down here in the comment sections. I'll see you guys in the next video. Till we meet again, peace.